Hello and welcome back. Hope you're good, doing well, enjoying your weekend, and are ready for next week. So just let me know, guys, that you see my screen and you hear me, and sound is there. Everything is just fine. All right. So maybe that's gonna be on your end. All right. So let's move on. Let's go. And if there is anything else, just let me know. All right, so if anyone want to join and looking for group membership, just simply head to wave-trader.com. All right, and if looking for further information, just fill that form and send that form for further information. I'll try my best to get back to you as soon possible. All right, or you can straight away join. Just visit that and you can join from that website. Okay, and let's look at the setups which we had last week, and then we're gonna talk about the setups for upcoming week. All right, so Swedish krona and yen, as you guys remember that in the last weekly market outlook, we were expecting this to drag lower from these previous top. Okay, if you have seen that video, then definitely you should catch that. You should be into that trade from that top, and these corrections, you are expecting these corrections to break down. Okay, and then the recent one which we had over there, it is just there. Okay, so that was a quick move, sharp move. It has just completed over there. Okay, so the move is just completed over there. So Uzi yen is also dragging lower. All right, so we were expecting it to hold that and go down for the next leg lower. And in the previous setup, we were expecting it to draw from that previous top. All right, so it is going down from that previous high. The Uzi yen is also dragging lower, pound dollar. All right, so we were expecting this to go down. Hopefully you guys are into that trade. Okay, so in the previous weekly market outlook, we were expecting the head and shoulder formation to break, but it went for another leg higher, and then we were looking for this to hold and then drag from that top. So since finding out top over there, it's just dropping lower. Okay, so update was there. Within that update, we were expecting it to drop from that top, and yeah, so pound started to fall. This correction, we were expecting it to break down and give us at least up to 35, at least move up to 35. And continuation trade was also there. This the flag breakout, that flag broken out, this previous flag. Okay, so we are within that next impulsive wave right now. Okay, so it's also going down. Euro dollar was also a short-term short opportunity on breakout of that flag. Okay, before that we were expecting it to drop from that previous top. Okay, if you remember, so that's this top. Okay, that should be on another chart. So that drop happened, tested that floor, short-term floor tested, and then it went slightly higher for another leg. So we're gonna talk about the updated chart. So euro dollar is also going. DXY broke out for next leg. Okay, so short-term target is almost reached, back to that top. And so Norwegian krona is also dragging lower. There was opportunity. All right, so we were expecting that correction to break down. It's heading back to that low. Last week's setup was there. All right, and The next one is the CAD yen. CAD yen is also dropping from that top. We were expecting it to hold that daily top, all right, or 4-hour time frame top. So it held that top and started to drag lower. And we were expecting this symmetrical triangle to break out and head lower. So it's dragging lower too. Pound yen is also breaking down, heading for the downside for the next leg. Yeah, previously we were expecting it to retrace off that bearish wave up to at least up to 70, all right, or 88. So it has retraced, all right. So back to that bearish moves. Now it's setting up for this wave. We are already, you know, having that wave is just appearing over there. So we were expecting it to hold that 57, 70 or 80, and then couple of continuation moves we had over there, that continuation trade. Then the next one was there, okay, and the recent one was there, short term back to that low, and the wave is on its way, longer term direction. Okay, so that short term reached and heading for the downside. So still we got a potential over there. Okay, so the longer term target is this area, this low. All right, so pound yen is heading back to that low, and euro yen is almost about to hit that previous low. Okay, another leg gonna drive that lower. So we're gonna talk about that. But the previous you know, trade, if you guys remember, we were expecting it to draw from that top, okay, that short term next leg, okay, and then continue to keep heading lower after forming that running flat, we can say that. So it's heading down from that top. Okay, so target gonna be still back to that low, right? So we still can see another leg lower over there. So continuation trade still can appear over there, very much similar like that. So we're going to talk about that, what to look for from current price. So it's heading down. Okay, so euro pound also bounced out from the floor, okay, and there are going to be a trade. So we're going to talk about that, what to do on it. So it's still there. So euro yen, this chart you have just seen over there, okay. So Australian dollar is also setting up for a drop. Okay, we were expecting it to hold that previous top, if you remember, this top, and continue to keep heading down this area. So target going to be this previous low next week. We are having, you know, a couple of central banks rate this year. Fed is one of them. So big week ahead, we can say that. Okay, so CAD yen for dollar, all right. So CAD yen is also heading lower. You have seen that chart. So bigger time frame, pound yen heading lower, nicely going down on daily time frame. Euro yen nicely going on down on daily time frame. All right. Pound also broke out that daily correction, we can say that. Okay, DXY heading higher for the next wave. So we're gonna look for this to break out for another leg higher next week, okay, and visit that 97 or possible sharp breakout of that 97 for more upside. So euro dollar down, heading down. Okay, so target gonna be that, if you remember. Okay, so in the previous weekly market outlook, so or in the previous video analysis on the euro dollar, so 112 going to be the target for medium term. So longer term target going to be much lower. So Ethereum, interesting, all right. So heading down, people were, you know, people gone crazy when I posted that chart that the Ethereum is setting up for a drop. Okay, so look at that. Wait for sharp sell off. So people gone crazy in the comment section. So what's happening right now? All right, so they got surprised that the Ethereum is falling aggressively to the downside. Okay, so come on, this is not. All right, so there you got. So when the sharp breakout came, sharp sell-off came, it just, you know, keep dragging lower. So Ethereum is also going down, and euro yen going down, pound dollar also broken down. So the Bitcoin, okay, so Bitcoin also heading lower back to that 30K mark. Surprised, all right. So for some of, you know, if you go and look at the comment section, when I was saying that Bitcoin is setting up for a drop from 69K, it was a surprise for them. Okay, so it was a surprise for them why Bitcoin gonna go down. So it's heading down. No, they are scratching their head. Oh, It has lost 50% of its value. All right. So I'm going to bring a chart for you, and then I'm going to talk about that, why it's going down. Okay, so there is the inflation. Okay, so US inflation. So US inflation is at 7%. Okay, and Fed fund rate is at 0, sitting over there at that bottom. Okay, so there is a huge gap, we can say that, or we can say that Fed is behind the curve, or Fed, credibility is, under threat. Okay, so Fed saying that they're gonna raise the interest rate, they're gonna tighten their monetary policy. They have just said, or they are talking only. Okay, they haven't taken any major step. All right, so that's the reason, risk on assets are feeling the heat. They are dropping very, very aggressively to the downside. And last week we have seen tremendous sell-off on some major individual stocks. All right, and almost have seen 2,400 points drop on the Nasdaq 100 index. Right, so which is a huge. All right, in March, if you compare that to March 2020 crash, then in March 2020 crash, it dropped almost 3,000 points, right? Nasdaq 100 index. So last week it has dropped, 2,400, all right, or 2,400 points. So it was a major drop last week. So that's telling us that investors are setting up for the tighter monetary policy. Okay, and Fed may raise the interest rates quicker than they are saying or they have said in past. Okay, and because of that, smart money is just going away from the risk on assets. All right, and Bitcoin is one of them, and that's the reason cryptocurrency is falling very, very aggressively to the downside. So as long as Fed is looking to raise the interest rate, all right, so you should be cautious for getting into the crypto market for more upside. Okay, so hope that makes sense for you. So we may see 4 or 5 rate hikes during 2022, all right, and which can weigh on the stock market and can put pressure on the crypto market as well. So those guys who are saying on Twitter, buy this support, buy that support, and it is going to hold that support, just simply do not listen to them. They have no idea that what's happening, all right, or what central banks are doing. So central banks, Fed is simply they trapped themselves in the box. Fed has simply trapped themselves in the box. Okay, if they no gonna raise the interest rate, if they no gonna tighten their monetary policy, what's gonna happen? So inflation gonna keep rising. All right, they're gonna be under more pressure. So if they're gonna keep their ultra loose monetary policy for a couple of more months, we can say that inflation gonna keep pushing more higher. Stock market can stay intact its previous bullish trend for more upside. Okay, but their credibility gonna be under threat. Okay, then they have to act more aggressively. Okay, then when they're gonna act more aggressively, then stock market can fall very, very aggressively. All right, and then they're gonna be again back to square one. So we may see recession in 2022. So they have to avoid recession. Okay, they have to act as well. So, and they have to keep the stock market intact as well for more upside. So they have trapped themselves in the box. If they're not gonna act, inflation gonna keep pushing more higher, and if they're gonna act too aggressively, that can halt the that can send shock waves in the stock market. Okay, so that's gonna be disaster. So we may see recession very soon. Okay, so keep that thing in mind if you are buying the crypto market. Okay, so do not listen people, those who are just posting on Twitter and saying that buy this bottom or buy that bottom, or it is going to hold 35k, it is going to hold 40k, 42k, buy based on that. So remember what I was saying when the Bitcoin was dropping. You remember the previous weekly market outlooks. Okay, so what I was saying that as long as price stay under those 4-hour moving averages, okay, so your trend is intact, your bearish trend is intact. Let me use that arrow. Okay, so as long as price stay below those moving averages, your trend is intact. All right, so just recent correction which has broken out over there, this impulse appeared over there, price remained below those moving averages. Okay, and what I was saying in the last weekly market outlook, you are looking for this correction to break down sharply, all right, or get a bigger one on 8-hour time frame and then drag lower. So you got a sharp breakdown under those moving averages and it went for the next bearish wave. So those who are buying just based on this support, if you remember my previous Bitcoin analysis, what I was saying, do not buy based on the support. All right, do not buy just based on these supports. These supports are not going to hold. All right, when sharp move gonna come, price is not going to hold those moving supports. Those who are buying just based on those supports or are buying just based on some Twitter following tweets, all right, so they are underwater. Now what they are saying right now, they're saying that they are buying Bitcoin for longer term investment. So what if it is not going to rise, okay, and we are going to see a recession and very soon, and Fed is going to act and going to raise interest rate very aggressively, then it may drop more downside. Okay, it may not rise from 30k, it can go all the way up to 20k, or in worst case scenario 15k or 10k. So there is no floor yet. It's a Bitcoin, we can say that is a new asset. All right, so just there for last 10 to 12 years, we can say that. All right, so it has to be there for longer term, for the investor to build confidence on that, for staying into that for longer term. So if you are buying and looking for this to hold for longer term, then that means longer term means longer term. All right, so like 5 years or 10 years. So price may not rise for upside back to that 69 anytime soon. We'll talk about that. I will talk about that. What are the possibilities for buy, and if buy comes, then up to which level we can see Bitcoin. All right, but when you are buying, when you are looking to invest in crypto market or any other coin, okay, but when Bitcoin drops, just remember that when Bitcoin goes down, the rest of the market will drop too. All right, so if you are planning to invest on any coin, just keep in your mind that right now Fed is looking to tighten their policy. If they are going to create a window, all right, or are going to delay, slight delay is going to come into the Fed tightening policy, okay, then we may see some buying opportunities in the crypto market. Okay, then we may see bounce off. So we'll talk about that in a while. So let's look at the chart first. Okay, so Bitcoin is dropping, Australian dollar against the yen is also dropping, Ethereum dropping, CAD yen also going down. All right, pound yen dropping, and dollar yen is also dropping. So next week dollar yen gonna be important. So dollar yen can go higher for another leg, okay, like that. Okay, so it's going to depend on the Fed, how Fed is going to react, how they are going to talk about how either they are going to be again hawkish and very hawkish. All right, so if they are going to be very hawkish, then we may see lot of strength on the dollar. Okay, and then it can go higher. And if they are not going to be hawkish and going to show concerns and going to say that they're still gonna wait and gonna delay before going to act, okay, then we may see a drop on the dollar. All right, then what can happen? I'm not anticipating drop on the dollar. As I said, that Fed has trapped themselves in a box. Okay, they have to act. So we're gonna see strength on the dollar. Okay, that's a clear picture for the next week. All right, so now let's talk about the setups for next week. Okay, so first of all, I'm gonna talk about the dollar index. So simple analysis, weekly chart is still there. All right, that hasn't changed. So you are simply looking for that to play out. Okay, so the word which I'm using is the Fed has trapped, okay, themselves in the box. So inflation is at 7%. Fed fund rate is at 0%. They have to raise the interest rate to bring the inflation down. All right, so that is clear. Okay, there is no question about that. They have to act to bring the inflation down. So if they are going to act too aggressively, then we may see, stock market can drop very, very aggressively. Okay, equities can drop very, very aggressively. So some individual stocks have dropped sharply last week. All right, investors are already, smashing those, major individual stocks sharply last week. So if they are going to act too aggressively, then dollar is not going to stop simply. Okay, dollar will continue its bullish trend, and that's what I'm anticipating. Okay, so dollar gonna continue its bullish trend and gonna hit that top, or in worst case scenario, it can break out that top and can go much higher. All right, so if stock market goes down, we are going to see recession anytime soon in 2022 or late 2022. All right, then dollar is not going to drop. Dollar gonna continue its bullish trend very, very aggressively for upside. All right, so last week we were expecting it to hold that trend and continue its bullish trend. So it's held that. It held those moving averages and formed that correction. Okay, and then we were expecting that correction to continue its bullish trend. Guys, I'm not looking at your questions, so I will talk about your questions later on. So let's just talk about the setups first. Okay, so it's breaking out for the next moves and heading towards the 97, okay, target, the short-term target. So that's going to be the next week. All right, so next week you are simply looking for this flag, okay, the correction which is just forming over there, that to break out aggressively and continue its trend. So if it's not breaking, then hold this previous double bottom. All right, this double bottom to form, and then this leg. So I'm not anticipating this move, so I'm not going to show price to go into that direction. So all right, so just only stick to the bullish direction for the next week. All right, or this expanding triangle formation. Okay, this is what you are looking, and your target going to be that top. Okay, still tradable. All right, still tradable all the way back to that top, and in best case scenario, break that top and continue to keep rising for more upside. So euro dollar going to be the inverse side, inverted chart. So longer term target is much lower. Okay, so same analysis, the analysis which I have made over there on the DXY for longer term. All right, so if Fed is going to act too aggressively, okay, then this is going to be the wave, all the way go back to that 104 for longer term, and that's what I'm anticipating. And euro dollar is too weak to rise against the dollar, because as you guys know that there is policy divergence between the ECB and the Fed. Okay, so previously we were expecting in the video analysis price to drop from there, these corrections to continue. So next week trade is this. Okay, so that's your next week trade all the way back to that low, and I'm anticipating price to hold that next week. All right, so do not break that previous low 112. So if it is not going to break down, then there's going to be a buy opportunity for short term. Okay, make sure you go after that short term back to this area. All right, so let me draw some fib lines over there. Okay, then we may see retracement of that move up to 70%. Okay, this move. So I'm not, you are not licking that move yet. Okay, once price gonna reach to there, then watch price action, what it is going to do. So the next week trade is this price to just continue to keep dragging lower. Okay, arrow is clearly showing. So another breakdown. All right, so another breakdown to come, and price to hold that previous top, or let's pull out moving averages, price to just stay under those 4-hour moving averages, okay, and break down and continue to keep dragging lower. So short-term trade gonna be that, okay, the arrow is clearly showing short-term trade gonna be that previous low, and medium-term trade gonna be that low all the way back to this area. All right, so that's going to be the euro dollar. So same trade going to be over there on the Australian dollar. All right, same trade you are looking on the Australian dollar. So Australian dollar has already dragged lower. Okay, so the charts which I have just shown you at the start. Okay, so it's dragging lower. Okay, dropping from that top. Bigger daily flag was there, and last week we were expecting it to hold this area, hold that top. All right, and then drag. So it slightly went higher and then, you know, find its direction to the downside. So going down, that's what you are looking on the daily chart. Okay, so still tradable. So this is going to be the trade. Okay, that's the trade you are looking for next week, and price to tag that low, that's going to be the target. All right, and on a lower time frame, price is just breaking down. I'm anticipating it to just, you know, keep dragging lower when market gonna open. All right, because move is already its way. I'm not anticipating this to do anything new. All right, so it's just simply trying to break down and trying to continue. So I'm anticipating this to just keep dragging lower all the way back to that low. In case if it is not going to continue for more downside, okay, then you are simply looking for this to go for another leg higher. Okay, another leg higher, test this previous top, form a double top over there or flat formation, and then continue to keep dragging lower. Okay, if that comes, then you are looking this to just keep dragging lower. Okay, all the way, then you're gonna get another chance to chase that trade from this previous top. All right, that's what you are looking. Let's move on. This is the trade. Okay, let's talk about the trade on you are looking on the Australian dollar. Okay, so the New Zealand dollar has already done that, so it has already completed that move. So dollar is already gaining against the New Zealand dollar. Okay, so it's testing that floor, testing that previous floor. Okay, so this trade still tradable. You are looking that trade. Okay, so price to visit this previous low, so dollar to gain against the Australian dollar too. Okay, hope that makes sense for you guys. Okay, so New Zealand dollar, I'm not anticipating any major move on this. Okay, so you don't have a potential opportunity on this chart. Okay, in the previous weekly market outlook, I have, you know, ignored that chart. Okay, but it has given us a, you know, similar kind of drop or similar kind of opportunity, which, you know, I have just shown you on the, you know, Australian dollar, US dollar. So let me find a chart on the New Zealand dollar. So I have to go back to find that chart. Yes, I got it. So there you got it. All right, so the New Zealand dollar is dropping from that top. Okay, and the target is almost reached over there. So the opportunity was there, it has gone. So right now I don't see any potential opportunity for the next week on this chart. All right, so better to ignore this chart, okay, and let the price keep dragging lower. I'm not anticipating this to go more upside. All right, I'm anticipating it to just keep dragging lower, and the target, okay, the target which I was talking about way before, if you guys remember that, okay, that's the target. So 20 October lows. So this to just keep dragging lower and keep going all the way up to 20 October lows. So that's what I'm anticipating right now. All right, I don't see any potential opportunity on it in case if it goes higher, okay, which I'm not anticipating at all right now. If in case if it goes higher back to that top, so still gonna be a continuation trade to the downside. All right, so if you already caught that trade from that top, all right, then you are simply looking lower time frame corrections to just keep pushing lower for more downside. Okay, any correction, if any correction appears over here at this area, okay, so you are just looking it to continue to keep dragging lower. Okay, so it's not going to be wise to chase the sells over there at the current price. Okay, so let that just go and simply ignore this chart for the next week. If change comes the way I have explained, you are looking to continue for more downside. Okay, I'm anticipating this daily correction which is there, break down, clear that previous low and continue. Hope that makes sense, guys. All right, so there you are watching. Okay, this is the opportunity you're still looking to catch. Okay, so the two charts you are watching very closely next week for you know, during the Fed rate decision. The one is the dollar CAD and the other one is the pound dollar. Okay, one is the pound dollar and the other one is the dollar CAD. So there you can chase. Okay, they are still sitting at the bottom, pound dollar still sitting at the top. So you are looking to trade on them for next week. Okay, so they're gonna be a great potential. All right, so if you missed other trades like you know, some yen pairs, okay, it's like euro yen, you missed that chart, or you missed the pound dollar top. Okay, so dollar CAD is still sitting at the floor, so you can chase that. All right, so let me find a chart over there. So even if you remember, guys, I was telling you that it can visit that trend line in the previous weekly market outlooks and can offer you a buy opportunity over there. All right, so if I'm gonna bring this chart, one is this and the other one is this. Okay, so this is what we were anticipating it to do way before. Okay, from that top, but price went higher, okay, and then started to go down there. All right, and it's just, you know, it has completed that wave. Okay, so the wave which we were anticipating it to form right now. So now it's setting up for this trade. Okay, this trade all the way back to that 28 or 29 target. So there are going to be a plenty of opportunities once price gonna, you know, yes, I'm anticipating a sharp, quick, aggressive move for upside. So they're going to be a rate decision on both currencies next week. They're going to be rate decision on CAD. Bank of Canada is also going to announce their rate decision next week. And we are having, you know, Fed rate decision too on the same day. On Wednesday, on 26th of January. All right, so first going to be the Bank of Canada rate decision, and highly likely they're going to be bullish too. All right, they are not going to be dovish. All right, so they're going to be hawkish. So we may see, you know, we may see some strength on CAD, but I'm not anticipating huge strength. Okay, so the main event going to be the Fed rate decision. Okay, so which is going to start at 7 p.m. my time. Just check your. So this is going to be the main event you are watching, all right? And dollar to just simply gain while having that rate decision, and that is going to be the chart, all right? So if I'm gonna look at the dollar CAD on lower time frame, so on lower time frame we were expecting it to find the floor over there last week, all right? But yes, there was some cautions because CAD was, so this chart is very well behind than the rest of the market. Okay, so that's the daily time frame chart, and this is the 4-hour time frame chart. So it's breaking up, all right? So it tested that floor, okay, and then broken out. So I'm anticipating this to give you a 1-hour time frame correction, all right? So if 1-hour time frame correction comes over there, then you are looking this to just simply continue to keep rising for more upside. This is the 4-hour time frame. Price already bounced off nicely. One correction already appeared over there and broken out nicely. Okay, this correction appeared over there and broken out nicely. So you are simply looking, you know, looking correction from those lower time frames. Okay, so you start looking for correction from these lower time frames. There is possibility that price not gonna visit the lows again, okay, and gonna keep rising aggressively for upside. So any 15-minute correction you see over there, you are looking for breakout, okay, and looking to get into the trade. In case if it is, you know, testing that floor again, which I'm not anticipating, all right? So if it is going to test that floor again, you are looking it to hold and rise. So clear opportunity, nice opportunity, all right? And simply setting up for that move. Okay, so a lot of potential gonna be over there on this chart, and they're gonna be, you know, gonna be a, you know, continuation trades as well. So almost a 500 pip move we may see over there on this chart. Okay, now I'm gonna look at the pound dollar. So pound dollar is also a similar trade, okay, which has already begun over there. Okay, so the trade has already is on its way. It's going down. Okay, so I'm anticipating a 1 hour time frame correction over there. So one correction has already appeared over there. So the short-term targets have already reached over there, right, on lower time frame. But the target, the first target you are targeting over there is a 70%. Okay, I'm anticipating a quick sharp drop. Okay, quick sharp drop means quick sharp aggressive drop like that. Okay, this is what I'm anticipating. So you may not see a correction over there. Okay, and if so, then don't stick to the 1 hour time frame correction, or don't wait for the price to pull back on a 4 hour time frame correction. Okay, so just keep watching the 15-minute correction and 30, 15, 30, 15, 30 minutes. All right, so any correction you see on 15, 30 minute time frame, if that's breaking sharply, just keep following that. All right, and the target you are setting, the 70% retracement of this previous move. Okay, and longer term target gonna be this previous low. Okay, remember this chart still needs to visit the 30, 20 June, 20 October. Okay, sorry, this chart still needs to visit this price. Okay, this area, which is 29. So if I'm gonna look at the New Zealand dollar is just about to hit that. Okay, hit this price, which is 20 October lows. All right, if I'm gonna look at the Australian dollar has already visited that. Okay, there, so it has already visited that price. Okay, so the potential, longer term potential gonna be on the pound dollar. So you know, ignore whatever their central banks are saying. They're saying that they're going to raise the interest rate, they're going to do this, they're going to do that. Okay, and based on that, pound gonna rise, or Australian dollar gonna rise, or New Zealand dollar gonna rise. They are not going to rise just based on their central banks, you know, hawkish policy. So the most important central bank right now is the Fed. Okay, how they are going to fight with inflation. Okay, their, you know, act is very much important rather than the rest of the central banks. All right, if they are going to act aggressively, then other central banks will not be able to, you know, give strength to their currencies by raising the interest rate. So the more important is the dollar. Okay, so this is what you are looking, go all the way up to 20 October lows. So if I'm gonna look at the 1 hour time frame, so a lot of potential gonna be over there on this chart. So there you are looking. Okay, so I'm anticipating price to retrace of this impulsive move up to 61. So if it retraces up to 61, okay, there's gonna be a nice correction over there. Okay, there you are looking it to retrace up to 61, or price, or if I'm gonna make it more simple, price to just simply come back within these moving averages. Okay, all right, so there you see price came, tested that moving averages, and then start dropping. Okay, again came slightly, went beyond that, then again started to fall. So you are looking it to pull back, all right, and continue to keep dropping aggressively to the downside. So this is what I'm anticipating, 1 hour time frame correction. Okay, so if that doesn't come, then you are watching all these, you know, lower time frame corrections, 15-minute time frame corrections, because I'm anticipating a sharp aggressive sell-off, all right, which hasn't reflected over there. All right, and you know, the sell-off which we have seen in the stock market. Okay, if I'm gonna look at the Nasdaq 100 index, I'm gonna try to explain to you from there why I'm anticipating it to go sharply. Okay, so we have seen drop from this previous top on the Nasdaq 100 index because there is a rotation up to this previous low, and the points which we have seen almost, you know, 2400. Okay, I have spoken about that before. So 2400 points. Okay, so if I'm gonna look at the crash which we have seen when, you know, pandemic, when we have seen lockdown, it went up to 3000 points. Okay, and after those, you know, 3000 points, we have seen tremendous reaction from the Fed. Okay, Fed has printed a lot of money, you know, after that. all right, which caused this to continue to go higher. So in terms of points, okay, in terms of points, so we have seen 3,000 points drop in March, okay, and strong reaction from the central banks. So we have seen drop almost close to that 3,000, 2,500, we can say that, okay, but we haven't seen any reaction from the central bank yet, okay, and this hasn't spread in the currency market yet, okay. Currency market hasn't moved yet off that drop. So we have seen that drop on the other indices as well, which I was talking about in the last weekly market outlook, okay, indices to go down. That hasn't reflected in the currency market yet, okay. So we may see sharp movements next week in the currency market. That's why I'm saying any correction you see on lower time frame, on 15-minute time frames, you are watching those 15-minute corrections to fall very, very aggressively to the downside, okay, sharply. Or let's talk about another chart. Okay, so if I'm gonna look at this chart, so you have seen those sharp moves over there, all right. So this is what you are expecting, these kind of waves, sharp moves, okay, these kind of sharp moves on the risk of move, on the risk on currencies to drop like that, okay. Hope that makes sense, guys. So now let's look at the yen pairs now, okay. So dollar chief, I'm gonna look at the dollar chief later on, because dollar chief is not going to give you a good potential right now. So euro yen is heading down, okay. So euro yen target gonna be that, this previous low, okay, 27.50. So you're targeting 27.50, and move is already on its way. So we still got a a continuation trade over there. We still can chase. So same analysis, the analysis which I have made over there on the pound dollar, okay. So you are looking this to pull back at least up to up to 70%, okay, or 61%. I'm anticipating 33 bars to appear over there within this correction, okay. We have seen almost almost 22 bars, okay, or 20 bars appeared over there, 1 hour bars, okay. And I'm anticipating it to break out and push up to this top, and moving averages to hold, and ABC correction to appear over there, okay, and then break out. So this is a short-term continuation trade. So if you have missed that chart from the previous top, or missed that trade, then you are only looking for a short-term continuation trade. You shouldn't chase that trade with a huge risk, we can say that, okay. But there are a couple of more pairs where you can take a risk and can build your positions for more downside, okay. But you shouldn't build a lot of you can take only 1 or 2 trades here once price gonna start falling very, very aggressively, okay, because I'm anticipating it to just find its floor over there, okay, this area, okay. So this continuation trade, so this to break out, go back within the moving averages, or this top, okay. This is the price, there you are looking, let me make it more simple for you, okay. There you are looking price action within these areas, okay, and searching the continuation trade, okay, within these areas. Your short-term target gonna be this previous low, okay. This is gonna be the trade first, okay, and once price gonna start falling aggressively, then you can extend your target for more downside, okay. This is gonna be the short-term trade first, and if price fall very, very aggressively, then this is the next bearish leg you are looking over there, okay. Pull back, and if I'll see that it's ready to take a trade, I'll try my best to post for you, okay. But this is the opportunity, okay. There is the chart you are watching, okay. There you still can catch potential, all right. So I was talking about this chart in my room to the members, that this is the chart you should focus, all right. And the potential which we had over there, okay, is almost a 5.5% drop over there, or 800 pip move. Okay, so almost almost 400 pip move, 3.5, we can say that 3.5 pips move, 3 and 3500, and 350 pip moves have just appeared over there. So 50, at least, almost 50% wave has appeared over there, but it's still got a room to run for more downside. Okay, so what you should simply look for over there, similar analysis, the analysis which I made over there on the pound dollar. All right, so chart you guys have just seen. Okay, I have updated the drop from that top. Okay, so it's dropping from that top, and the triangle to break out. Okay, so lower time frame, this triangle to break down, that broken down. So as I said, I'm anticipating a sharp sell-off. Okay, this sharp sell-off hasn't reflected over there on the currency market yet, the sharp sell-off which we have seen on the equities. Okay, so this is what I'm anticipating. Your first target gonna be 70%. Okay, these areas, and in best case scenario, this previous low. All right, and on lower time frame, this is the chart you should follow. All right, so again, similar kind of pullback like the euro yen first. Okay, so first of all, you are looking for a 1 hour time frame. So setting up for 1 hour time frame pullback. There, as I said, there is possibility that we may not see that. Okay, and price can fall, can continue its trend aggressively to the downside in 15-minute time frame. All right, so keep that thing in mind too. So pull back up to 61 of this previous impulsive wave. Okay, a similar kind of pattern formation like euro yen has done over there. And let's bring the moving averages. Okay, so 1 hour moving averages to hold. Price to go back within the 1 hour moving averages. All right, and up to 61. Okay, and then continue the short-term trade gonna be this area. All right, so do not buy, simply do not go for buy for that trade. Okay, so simply look for pullback and continuation trade to the downside. If that's not coming, then you are, as said on the pound dollar, you are looking for these corrections to break out. Okay, keep eye on the pound dollar with this chart too. If pound dollar keep breaking down or pound yen keep breaking down, you can take trade on any pair. If let's say if pound dollar break that 15-minute, pound yen break that 15-minute time frame correction sharply to the downside, and you miss that, yeah, do not chase that. Just go after the pound dollar. Both trades are same. Okay, if one goes down, then the other one will drop too. So if you missed one, then you can chase the other one. Hope that makes sense, guys. So 1 hour time frame moving averages. Pound dollar is also same. Dollar yen. So CAD yen. All right. So CAD yen. Let's talk about the Aussie yen first, and then we're gonna talk about the CAD yen or NOK. Right. So NOK first, because there is still potential. So the wave is already on its way. We were expecting it to correct back to that 70% or up to 80. So it corrected. And breaking down last week, we were expecting it to hold that and drag lower. So there is also potential. Okay, so similar potential over there. So almost similar. Okay, so 7%, so 8% drop can happen over there. So 7.5, we can say that. So broken down. Okay, so broken down, heading lower, 1 hour time frame. Same analysis, 61% retracement or moving averages, 1 hour time frame moving averages. Okay, so pull back up to 61. If it does not come, all right, then you have to keep eyes on 15-minute time frame, guys, because I'm anticipating a sharp sell-off next week. All right, so and there is possibility that the 1 hour time frame pullback not gonna come and price is gonna keep falling very aggressively. All right, so then you have to keep close eyes on these corrections. Okay, you see that 15-minute correction appear over there and then started to drag lower. So set up for 1 hour time frame correction first. Do not chase the 50-minute time frame. Okay, and if it comes, okay. If not, then you can take a risk. All right, for the 15-minute time, because 15-minute time frame correction correction gonna form first. All right, why I'm saying 1 hour time frame correction, because 1 hour time frame correction gonna give you a better risk, a better, you know, entry, stop placement, and better, you know, target, better reward. All right, so you may end up, you know, losing some trades by, you know, chasing on 15-minute time frame. All right, so Aussie yen is also dragging lower and held nicely those 4-hour moving averages. Oil gonna be short too next week. We'll talk about that. So simple analysis, again same, price to pull back. All right, pull back within the you know, that 1 hour moving average, okay, or 61% tracement of this previous impulsive wave, and the target gonna be that previous low. So still you got a lot of potential on this chart. Okay, so pull back, and that is the trade. Okay, so the arrow is just simply showing. So same goes with the CAD yen. Okay, so what a tip I can give you. So watch the other, you know, Aussie yen, pound yen, and euro yen. If they keep falling aggressively and CAD yen do not move, okay, then you can chase that, because CAD is still strong because of, you know, stronger oil prices. So oil has to draw from the previous top, then CAD gonna start falling very, very aggressively to the downside. All right, so same analysis. Okay, so nothing has changed on this chart. So you are simply looking a pullback of this impulse, okay, or 61% retracement of this chart, okay, or this impulse. So 61% retracement, or you're gonna have 1 hour moving averages over there. Once price gonna start retracing, you're gonna have 1 hour moving averages over there. Okay, and once 1 hour moving averages gonna come, price gonna hold that, you're gonna have a nice correction over there, and then you're gonna start looking for this to continue to the downside. Okay, so keep eye on the 15-minute time frame. So both trades are same. If I'm gonna invert that chart, okay, so this chart is also similar like the dollar CAD chart. Okay, so the trade on dollar CAD I have shown you is this. Get back to that top. So this is also a same trade. So dollar CAD to go higher and CAD yen to go lower. Make sure you do not mess up with your risk. Okay, so Kiwi yen is almost done. I don't see potential and, you know, any opportunity right now on it. But what I see that this to continue to keep dragging lower. Okay, all the way. This is going to be the longer term target. All right, all the way back to that low. So we still may see another leg higher on this chart. Okay, so Kiwi yen is dropping from the previous top. We were expecting it to behave similar way, and last week, if you guys remember that, we were expecting it to give us a you know, flat formation. Okay, 4-hour time frame flat formation. So it's broken down. So the trade is almost gone. Okay, so the wave is almost gone over there. So last week we were expecting this to break out. It slightly went higher and then went lower. All right, and so the trade is simply gone over there. So if you are looking any opportunity right now on it, there is no opportunity, because price has just simply completed that wave right now. So similar like the New Zealand dollar, I would suggest you to just simply stay away from this chart. Do not do anything. Let this to move. And if I'll see opportunity on this, then I will, you know, update. All right. So right now I'm just simply neutral on this, so won't show you any direction in case, you know, in case, you know, yes, just ignore it. Okay. So dollar yen. So what is important? The important thing here on dollar yen is that how Fed is going to do next week. Either they are going to be hawkish, or they are going to delay in their tightening cycle. Okay, if they are going to delay, we may see, you know, some buying on the stock, on the equities. Right, equities can bounce off, which I'm not anticipating. All right, so if they're gonna delay, it's gonna make their, you know, case more worse. So, you know, we may see some strength on the dollar next week. All right, so if that strength comes, then we may see, you know, another leg higher back to that low. So if you remember, we are longer term bearish on the dollar yen. We are not looking dollar yen to go much higher, all right? And you know, this to draw for longer term to the downside. So what you can do on this chart, in the last weekly market outlook, we were expecting this 1 hour time frame correction to break down. Okay, so it slightly went higher and then started to go lower. So, you know, do not short it next week, specifically during the Fed rate decision. All right, so, you know, let the price keep dragging lower, okay, and watch. If it bounce off, then you're looking it to go higher for another leg, okay, back to that top, and then start looking for this to keep dragging lower. So this is tradable, okay, but after having price over there at that low, this previous area, okay? So this one more leg can appear over there for the next week. So this is the analysis for next week only. So we'll see how, you know, dollar yen gonna be ready for after the Fed rate this year, okay? So if it is going to be ready for, because I'm anticipating drop on it, okay? It went higher, okay? Why dollar yen went higher? Because of the higher yields, all right? People were buying dollar because they were expecting the Fed gonna raise the interest rate, and they were buying the dollar against the yen. Yen was, you know, losing its value because of the higher yields, all right? And when yields goes higher, you see bond prices goes down. Bonds are safe havens. Yen is also a safe haven, and you know, that's the reason which was causing the dollar yen to go higher. Okay, so as said, Fed has, you know, trapped themselves in a box. Any mistake from them, from the Fed, can drive the dollar yen aggressively lower, okay? Then you're gonna see dollar yen gonna go down sharply to the downside, and that's what I'm anticipating, all right? So dollar to stay under pressure against the yen, all right? Because stock market has extended a lot, and can go into a deeper correction at any time, all right? So that's gonna give strength to the yen, and dollar yen gonna go down. So chief yen is also similar like that, okay? Right now I'm anticipating this to just keep dragging lower slowly back to that low, and then we may see that one more up leg. So continue to keep dragging lower all the way back to that low. So it's not a best chart right now for next week, all right? So try to avoid trading on this, okay? But longer term, I'm still bearish on it. So SEC is also completed that trade, the trade which I have just shown you on other yen pairs, okay? So there is the example, the trade which I have just shown you on other pairs like pound yen. Okay, so let's pull out the MACD over there that you can see. Okay, so we got a correction, we got a drop, okay, we got a daily correction, and we got a weaknesses. So yen got stronger. Okay, we got extended move over there. If you remember, I was talking about this, okay? Pound yen to go into that direction, retracement of this move, 70%, okay? 70% of this. So we got, you know, up to 88% of this move. So it has given you the move, okay? But this trade is still there, okay? You can't chase that. And MACD has already started to go lower, okay? There we are having, you know, bearish signs appearing over there. So the wave is already over there on the SEC, the bearish wave, SEC yen, okay? And the continuation, short-term continuation trade gonna be over there, one more leg lower. So you shouldn't chase that for big drop. Okay, you only can chase it for one more leg. That's it. Okay, so first of all, price to pull back up to 61. All right, breakout 61. And there is the 61. So 61 are moving averages, okay, or 1 hour moving averages, whichever comes first. All right, and then this is going to be the trade. All right, this is going to be the trade. Another leg lower like that. Short-term target going to be this, or possible breakdown. So this is tradable. Okay, so let the price correct and complete that correction, and then continue to keep dragging lower. So rand also going to be a bearish chart. Okay, so the trade you have seen on other yen pairs, that trade still to come over here. Okay, so daily breakout all the way back to that low. So it slightly went higher. I wasn't expecting that, okay, but the trade is still there. right? So what is the worst case scenario on the rand against the yen? 88. Okay, so retracement, which I'm not anticipating this to go that much far away. Okay, so max is going to be the 70% retracement. Okay, but the trade is clearly over there. So you're watching all these tops and watching a sharp sell-off over there for the downside. All right, so Bitcoin, let's talk about that. There is the daily chart. Okay, so if you're gonna look at the updates are over there. So if you're gonna look at the comments, right, then you're gonna see that no one sell BTC, bears that. If you're gonna look at the comment sections, so a lot of, we can say that unknown traders, okay, those who even have no clue, no idea that what it was doing, what BTC was doing. Okay, so we are about to tag that previous low. So again, as I said, how Fed is going to do next week. So, I'm not anticipating, Bitcoin to break down this previous low. Okay, there is no, reason at the moment for the BTC to break that 30K. Okay, but before looking at that, let's look at this chart. Okay, what I said in the last analysis, the analysis which I made, video analysis, that led this to complete. There was the divergence. Okay, there was the divergence. So price was making higher high. Okay, those who are buying over there, those who are buying the BTC over there at that top, they were ignoring that divergence. Okay, price was, MACD was falling, right? And price was making higher high. There was a strong divergence, all right? And now divergence is in play, is playing. Okay, what I see another leg higher over there, like that. Okay, another leg higher. All right, another leg higher over there, like that, which can extend up to 70%. All right, up, price can go up to 57. All right, or in best case scenario up to 60. All right, so right now there is no, no buying at all. Okay, you shouldn't chase that, buy. First of all, let the price fall and sit at the 50. Okay, so let the price fall and sit at this, at the 30K. Okay, all right, so let the price sit at the 30K like it has done over there. It was struggling to break below that. All right, so triple bottom, we can say that, and it's found over there, found its bottom over there, and then started to rise and went all the way back to the high. So I'm anticipating similar kind of move over there on the BTC. Okay, so right now you don't have anything over there for buying, so do not buy it. Just simply ignore all those Twitter accounts, those who are blindly saying that buy it. Okay, so what you are simply looking, price to break down. Another correction is just simply forming over there, or first of all, this 1 hour time frame correction, okay, which is just appearing over there. This to break down, continue to keep dragging lower. And once price tag that 30K, watch your order book. Okay, if people are showing their interest, showing, their, pending orders are there on your order book, and price is struggling to break down that 30K, once those pending order triggers, okay, that is going to create price action over there. Okay, so you can, get into the market once there are going to be some, aggressive price action for upside. Then you can, look for price, some buying over there, right? And if it keeps rising aggressively, then you can hold it for up to 70% retracement of that previous bearish wave. If that doesn't come, okay, and price keep falling, let the price keep breaking down 30K, or if it goes lower than 30K, then let the price go up to 25k. I'm not anticipating it to go up to 25k, but right now, as I said, anything can happen, as you know, a lot of uncertainties over there from Fed side on the market. So if that 1 hour correction is not breaking, okay, then let the price go for a 4 hour time frame correction like it has done previously. Okay, another slightly bigger correction, 4 hour time frame correction, and then drag lower all the way up to 30k. I'm anticipating it to so you sold from 65, great. All right, so let the price sit over there, okay, and 30k, sorry. Okay, so there is no buying, guys. Do not simply chase blindly. Okay, there is no buying. Okay, so once these coins, once Bitcoin gonna tag that previous low 30k, I'm gonna show you some price section for upside. Okay, so the coins you should buy gonna be the BNB. All right, so you should pay attention on the BNB. BNB is also going to visit that previous low. There I see potential on BNB. Okay, you know, longer term potential on BNB rather than the BTC. Okay, so you can see, you can look for buy on Solana as well. Okay, Solana can go higher for the next wave too. So Solana, BNB, Ethereum also, right? So Ethereum also gonna be a buy, right? But if you had your long positions on the BTC, all right, so what I will suggest you to take out, okay, if you are looking to hold for longer term, okay, so take out your holdings for longer term once that retracement will come over there on the BTC. Okay, so I'm anticipating that retracement to come and visit that 56 or 57,000. All right, so and then again I'm anticipating it to drop from there, okay, from 70% retracement to go down to, okay, hope that makes sense, guys. So yeah, right now there is nothing for upside. You are simply looking this, go and visit that 30k. So we're gonna have, you know, weekly market outlooks. I will talk about that, what to do, you know, next once price gonna sit over there. All right, so a similar kind of pattern formation may appear over there, right, like that. The longer the price gonna stay over there, it's gonna be better for buyers, right? The longer the price gonna sit over there, gonna be better for buyer. Or sharp aggressive move. I'm not anticipating sharp aggressive buying over there from the 30k right now, as Fed is there. Okay, so same analysis on the Ethereum. Ethereum is also about to tag that previous low, guys. All right, and flat is about to being tested. Okay, so 1800 bottom is about to being tested. So if I'm gonna make it more simple, same analysis, your moving averages are being tested on 4 hour time frame. Every time and prices come in within those 4 hour moving averages, it's breaking down. So trend is still intact over there. Okay, you see over there. So if 1 hour time frame correction is building, it can slightly get bigger, okay, for 4 hour time frame and then drag. So if I'm gonna bring 1 hour time frame correction over there, so correction is already appearing over there. You're simply looking for this to break down. Okay, slightly can get bigger. Another crash, okay, and another crash, and more pain for those traders who are, you know, Twitter traders. All right, those who just, you know, keep tweeting on every minute, or whenever they see that 1 minute candle is just pushing higher on the Ethereum. Okay, they start tweeting that this is the bottom, this is the bottom. All right, so that's the bottom, buy there. Okay, and after that they start, you know, getting worried about their bottom again. All right, so there will be a clear sign. Once there's going to be a bottom on the crypto market, there will be a clear sign that the market is going to find its bottom and going to rise. Do not go early. Okay, so save your you know, powder for better buyings. Do not follow the TikTok traders. All right, people come on the TikTok and keep saying that this is the buy or that is the buy. They have no clue what's happening. All right, so as said, this is going to be the much better chart to follow. All right, so I see longer term potential on Binance Coin. Okay, so this is going to go much longer, I mean much higher you know, I see that the price gonna go higher than this in longer term from 700. Okay, but for now, you are simply looking this to tag the floor. Okay, BNB, similar analysis like the others. Okay, so 4-hour moving averages, correction is underway. Next one, like this previous one. Okay, so that can go all the way up to those moving averages. All right, so the bigger the max correction is there. Okay, and then breakout. So right now, 1-hour time frame correction to break down, and BNB to continue to keep dragging lower. Okay, so once BNB goes to, you know, goes to 200, all right, 200, yes, 200 or 220. So you can start accumulating, all right. So this is a cheap coin, cheaper than the BTC, cheaper than the Ethereum. Okay, you can, you know, accumulate, all right. And the move you are looking is the retracement of this move. Okay, so 70% retracement. Remember, Bitcoin is about to test this low, right? So let me bring. All right, so Bitcoin is just about to test that. So we are, you know, still 41% away from that previous low, okay? And we're just 15% away from this previous floor. Okay, so this is just 15% away, about to test this previous low, okay? And this is still 40% away from this previous floor, okay? Means that if this drop, okay, then this is not going to rise, okay? You shouldn't be a buyer over there at the current price, okay? And it is going to visit this low. So there is still a potential for more downside. 41% drop can happen over there on BNB. Okay, and do not chase the BNB for buy from the current price. As long as BTC is dropping, you shouldn't be a buyer over there on other coins, specifically against the dollar or Tether, right? Whatever. Okay, specifically against the fiat. Okay, so there you are looking this to continue. And then you can see, you know, accumulation period over there. There will be a clear price action over there. We'll see. So 10-year yield. So 10-year yield to. So the higher the yield goes, okay, the higher, longer term, I'm anticipating yield to go much higher, okay. And as I said, you know, this chart. So you know, inflation is at 7%, okay, and Fed fund rates, it's close to 0. So longer term, you should expect rates to go at least up to 3, all right, 3 and 3%, all right. The higher the yield goes, okay, there's going to be pressure on the stock market. Equity is going to be under pressure. So longer term direction is very much clear by looking at this chart, okay. You know, when you look at this chart, it tells you that Fed is going to raise the interest rate, all right, and the direction of the yield is the bullish, okay. There is no question about that. That's the direction. All right, but this is not going to rise in straight line, okay. This is not going to rise in straight line. So we're going to see pullbacks like that, okay, and then price, you know, going to keep rising. So as I said in the previous weekly market outlook, I'm anticipating another drop, another leg lower, okay. So this drop yield, okay, so I'm anticipating it to go down. So this drop gonna bring the trades which I have just shown you on the yen pairs, all right. The trades which I have just shown you, this drop gonna bring those trades, all right. And we may see, you know, buying on the stock market, okay. So equities can find their bottom over there. So we need to see, you know, some, you know, yields to go lower. You know, normally when we see, you know, yield goes lower, bond goes higher, okay. That's the correlation with the stock market, okay. When stock goes down, people start buying the bonds, okay, and yields fall because of the uncertainties, okay. But right now, you know, we are not having, you know, recession, okay. Right now, Fed is looking to tighten their policy, and correlation is, you know, changing, we can say that, all right. So drop drop on yield gonna push the drop on yield. Why drop on yield gonna push the stock market higher? Because investors gonna say that Fed still behind them, okay, and not looking to raise the interest rate, still dovish, still having ultra loose monetary policy, which gonna cause the stock market to equities to keep pushing more higher, right? And bonds, yields gonna stay under pressure, and people gonna invest into the bonds, and gonna invest into the indices as well. Okay, so we may see strength on both at the same time. We may see strength on the bond prices. Bonds prices can gain. Okay, we may see strength on the indices as well. Normally when indices goes down, bond prices goes higher and yield goes down. Okay, but this correlation is changing right now because of the change in policy from Fed size. Okay, Fed side. Bonds bonds dropping, all right, bond prices are dropping, yields pushing higher, and at the same time, because of the higher yields, stock market is also equities are going down, equities are under pressure. Okay, so correlation is changing, both are dropping at the same time. Okay, so I'm anticipating a drop over there, and next continuation move over there. Okay, so Nikkei index to drop. Okay, so last week what we were expecting flat formation. Okay, in the last weekly market outlook, we were expecting it to form a flat and go down another leg. So this leg is just appearing over there. Okay, so still expecting it to drag more lower. Okay, so there you see my fib lines. Okay, I don't see bottom over there yet on the Nikkei index. Okay, so we may see more downside. It can slightly drag lower and can break down that previous bottom. And the worst case scenario, the price gonna go up to 38. Okay, so if it goes to 38, the trades which I have shown you on the yen pairs, those trades gonna hit the target. All right, so strength on the Nikkei. If Nikkei gonna bounce off, then we may see slow drop, slow strength on the yen pairs. Okay, if this rise very aggressively like that and going to push up aggressively, then we may see some changes on the yen pair, which I'm not anticipating right now. Okay, what I'm anticipating this to just keep dragging lower. Okay, so you shouldn't chase that trade over there and let the price drop, and in worst case scenario go all the way up to 38% of the whole move. Okay, 38% of this whole move. Okay, then again we may see some buying over there all the way back to that top. We'll see, but right now they are at the bottom and trying to find their bottom. Okay, but bottom is not in place. So bottom may be in place after Fed rate decision. Okay, after Wednesday, how Fed is going to communicate with the market, that's going to be important. Okay, after that we may see reaction in the equities, so that's going to be important. So S&P 500, like I said last week, I was anticipating this to form a similar kind of pattern formation like we have seen on the Nikkei index. Okay, this to go in the last weekly market outlook, go there and then drag. So price never went for that top and just simply drag lower. Like we didn't see that flat formation. So I still see S&P 500 to stay under pressure, do not rise as long as Fed decide is there. Okay, so we have seen almost 9% drop, we can say that, on S&P 500. Okay, so this chart is very important chart right now. So inflation is at 7%, Fed fund rate is 0%. Okay, so rise on the rates, Fed fund rates, will not let the stock market to continue its bullish trend for more upside. Okay, so what I see that the equities have found their top for longer term at this price. Okay, I don't see that the equity is gonna go much higher than this price. Okay, 4,800 or the 5,000. All right, or 5,000. Okay, So it's going to be really hard for the US equities to break above that level anytime soon. All right. If you remember, okay, so this whole move, all right, so there were plenty of buy the dip opportunities. All right. So still there are going to be a buy the dip opportunities, okay, but you're not going to see, you know, similar kind of next run anytime soon. Okay, so yes, these still going to be the trades you can trade, you know, while at raising the interest rates. So if I'm going to go to the lower time frame, you're still, yeah, again, same analysis, guys. What is the worst case scenario? Like I have shown you on the Nikkei index, is the 38% drop. Okay, so 38% drop we may see in worst case scenario. You know, 38% of this previous move. I'm not anticipating right now that move. Okay, but in case if that comes, make sure you are prepared for that. Okay, so I'm anticipating this to find its bottom over there, its floor over there next week after the Fed rate decision. Finish that move there, bounce off, correct, and go back up. Test that top. After Fed rate decision, we may see that move. Okay, and this is a nice move. This is a nice trade. So again, guys, keep in your mind that you know, any strong strong action from Fed can shake the market aggressively to the downside. So if you're buying, and I mean you are risking a lot of money buying these dips, then think twice. All right, so risk reasonably. In case if it drops very aggressively to the downside, then you are not going to get a pain. All right, and you may get a good price again for buying the S&P 500 in case if it crash because of the Fed rate decision, okay, which I'm not anticipating. Just make sure you use reasonable risk, and once it is clear that the dip is going to hold its floor, okay, then you can build more positions. Okay, so your target gonna be that previous top. Right now I'm gonna, you know, pull out some structure over there. Right, so we are still having a strong bearish market over there. Okay, and price can drag for, let's pull out some moving averages. Okay, so price still can drag lower for more downside. Price needs to go above those moving averages for okay, those moving averages for next bullish wave to come. So any correction is already there. Any more correction gonna drag that more lower. Okay, and you are looking for a sharp aggressive move like that. Once that appear, you can get in, or you can wait for this correction to come over there. There will be a correction. Okay, there will be a correction once price gonna found its floor over there. Okay, and always that happen always on the indices. Okay, there is the example. Okay, it bounced off nicely after having that floor. Okay, impulse appeared over there, correction, and then next run came over there. So let the price find its floor, bounce off, correct over there, and then you can get in there, or you can get while the sharp move having. So do not chase, do not, you know, get into the trade while it is falling very aggressively. Okay, these are not the dips. Okay, these are correction for more downside. Okay, and you shouldn't chase that when price is correcting. You shouldn't get into the trade or upside. So as you know, there are many people looking to buy the dip. All right, but need to be cautious this time. All right, the same goes with the Nasdaq 100 index. So the worst case scenario is the 38. Okay, so the worst case scenario is the 38% retracement of this previous whole move. Okay, it can go up to that 38%. Okay, but still gonna be a buy the dip opportunity. Okay, so you know, what you are looking, simply same analysis like the S&P 500. Right now price is just simply testing that floor. Okay, so you need to see a sharp aggressive bounce off over there. Let's go to the lower time frame. Right now I'm not anticipating till Wednesday. Okay, after the Fed rate decision we may see some, you know, bounce off over there. So do not buy before that. Wait for the Fed to be over, and then you may see, you know, some good price action over there. Then start looking for this to bounce off, correct over there, and continue. Okay, right now there is no any buying price action over there, we can see over there. Okay, so it's just simply correcting. If I'm gonna draw a couple of trend lines over there, okay, there you see, so trend is still bearish over there. There is no buying over there. A similar kind of analysis like the S&P 500. So price to bounce off aggressively over there. Okay, so still can drag more lower. Do not run after that or buying. So if I'm gonna look at the other indices and then gonna come on to the later, come on to the other currencies. Okay, so if I'm gonna look at this, so what I was talking about last week in the last weekly market outlook, drop. Okay, indices to go down. So it's dropping. Okay, not just this, the rest of the indices are also dropping. So the price you are watching is this, all right? Or in worst case scenario, 38%. Okay, I'm not anticipating, as I said, this to go that much far away. Okay, but if they drop that much far away, still gonna be a buy the dip opportunity. Okay, so there is the price you are watching next week. Price to drop, bounce off on lower time frame, correct, and get back to that top. Okay, so same goes with the German 30. Last week I was talking about this to drop. Okay, so it's dropping, more downside is possible. Okay, do not chase it at this. So let the price visit that low. Same analysis. Okay, so UK 100 index is also similar. So drop first. So go and visit that low, expanding triangle, and then continue. So there we may see, you know, aggressive sell-off. And on the large cap and small caps. Okay, so there we were talking about this to go down last week in the last weekly market outlook analysis. Okay, so it's dropping right now. I still don't see bottom over there. Okay, so this is the price you are watching, similar like the other indices. Okay, hold that previous low and then continue its bullish move for upside. All right, hold that and continue, specifically after the Fed rate decision. Okay, so US Russell 2000, last week we were expecting it to break down too. Okay, so this tiny arrow, so this tiny arrow to appear over there. So price is still falling, so we are not having bottom over there. Price is not, you know, holding. So the worst case scenario is the 38. Okay, so small caps are about to visit the 38. Yeah, so small caps are leading us right now. They are telling us that there is pressure on the US indices. Okay, so some other indices like S&P 500 is very far away from 38%. All right, Nasdaq 100 index is also, you know, away from 38%. So just keep in mind that they can fall that much far away where US Russell 2000 is. All right. So right now there is no buying yet. If I'm gonna look at the moving averages on this weekly time frame, price is about to test that, and you are simply looking for price to hold that next week, specifically after the Fed rate decision. All right, so they are dropping because of higher yields. Okay, so hold that and bounce off. All right, like that, simply like this. So these areas, these places to hold, right? So Russell 3000 is also very much similar like that. All right, so weekly is very far away, right? So if I'm gonna remove that and that's the let's pull out the 38%. Right, so 38% is far away, but keep in that mind. Okay, price can visit that 38%. I'm not anticipating. So all these previous lows you are watching, okay, these previous lows. So go there, slightly tag that, and then continue. So same goes with this Euro Stock 600, go down and then go higher. All right, test this previous low. The franc 40 is also dropping. Last week we were expecting it to drop, test that previous bottom. All right, so stock 600 is also dropping. Last week we were expecting this arrow to appear over there, so still can drag more lower. So these are the indices, okay? And now let's look at the same analysis on the indices, but people, normally look for the US indices to buy the dip. Okay, so you can look for buy the dip after the Fed rate decision. All right, so we have done the euro and dollar sheaf. Okay, not a best chart right now, okay, but simply during the Fed rate decision, this is the move you are looking. Okay, that's the wave. Okay, price to just hold that previous low during the Fed during the Fed rate decision. All right, so that's the trade. Arrow is clearly showing. So your short-term trade going to be these areas or that top. Okay, and continue to keep rising. So CAD Chief is also dropping. Okay, last week we were expecting it to correct on 4-hour time frame and then drag. Okay, so if you remember the last week analysis, price was there. We were expecting it to correct. It corrected and double topped. Okay, what I said in the last weekly market outlook, 4-hour time frame correction, a double top. Okay, so we still get a potential on this chart. Okay, the potential is this previous low. Okay, that's the target, this previous low. So any correction, let's go to the 1-hour time frame. Okay, so price to pull back 61%. All right, so this to pull back of this previous impulse up to 61 and then keep dragging lower. Okay, all the way back to that low. So if that comes, then this is what you are looking. Okay, in worst case scenario, price to visit that top. Do not chase that. If it, if it keeps dragging lower, you shouldn't chase that because it has dropped a lot from that top. So if you're gonna chase that, you're gonna get, yeah, 150 pip move gonna be over there. So then better to go after the dollar CAD rather than this short. Yeah, go dollar CAD is that chart. So last week we were expecting it to go down for short term and then bounce off aggressively. So this is the longer term chart. Okay, so price to hold this previous low, and in case if we are going to see recession anytime soon because of the Fed acts, okay, then this is going to be the move. Okay, aggressive sharp move for upside. So far for the next week, specifically during the Bank of Canada rate decision, the move you are looking is this. Okay, back to that top. This is what you are looking. So price already bounced off sharply. I'm not anticipating this to continue to keep rising till Wednesday, right, without correction. Okay, so price to correct simply, very much similar like other charts. Okay, so at least up to 618, or in worst case scenario, double bottom. Okay, double bottom and then continue to keep rising for upside. Okay, already bounced off sharply. So there you're paying attention. Okay, correct, continue, or double bottom and then continue. So pound chief, okay, what I said in the last weekly market outlook, both trades are same. All right, so either take the pound dollar or take the pound chief. All right, so pound chief dropped more, by the way, sharp, aggressive than the pound dollar. Anyway, so both gonna visit the lows. All right, so if I'm gonna look at the pips, all right, so 47, 470. Okay, and this got almost 580 pips. Okay, so still got a lot of potential over there. Okay, on this chart. So Fed rate decision is the best timing for the pound dollar to drag sharply lower. Okay, like this has done. Okay, dollar still need to gain. So chief gaining on the stock market drop, yen is gaining, but dollar is not gaining. All right, dollar still need to gain. All right, so So almost 50% wave is just gone on the pound chief, okay? But just 25% we can say that dropped happened over there on the pound dollar. So both are same trade. So if you have taken either one, you still looking them to keep dragging lower. So your target gonna be this. Okay, this is the target. And last week we were expecting correction, 4-hour time frame correction. Okay, this are double top like cat chief. So correction just broke out. So what next? So same analysis like other safe havens. Okay, a 61% tracement are moving averages. Okay, so price to correct up to 618, this 618 are moving averages to come. Similar kind of correction like that. All right, correction I'm anticipating simple ABC move like that. All right, and then drag lower. So this still got a potential. Okay, so still got a potential. So let this pull back and continue to keep dragging more lower. Okay, that's the move. Hope that makes sense. Same trades like other pairs. So this is still sitting at the floor, not moving. Okay, so trade is bullish. If I'm gonna look at the 1-hour time frame, or let's look at the lower, further lower. So any correction you see over there, okay, you are looking those to just simply pump for upside. The corrections are happening, so simply looking for breakouts. All right, breakout like it has done there, or like it has done there. Breakout and continue. So if breakout doesn't continue, okay, do not rise aggressively, okay, and drop, still gonna be a buy opportunity for more upside. So the target you are looking on this chart, all right, so is the trend line. Okay, this is the channel. That's the trade. Not a big trade, okay. So 250. Yes, we'll look at the commodities. Just bear with me. Couple of more, you know, couple of more currencies left. Then we're gonna talk about them. So just simply stay away from this chart. All right, pound Australian dollar. I'm anticipating this to drag lower back to this area. Okay, so slightly can push higher, but another leg. Okay, before going to get down. Okay, so better to stay away, neutral. Same goes with this chart. Last week we were expecting it to continue after having a flat formation. We did not see flat formation. Okay, we have seen flag and prices just keep pushing more higher. So not a best chart. What I will suggest, just simply stay away or let the price correct and continue to keep pushing more higher. All right, so let the price just keep pushing more higher after having 4-hour time frame corrections. Okay, moving averages are just simply coming over their price to come, hold moving averages and just keep running. So pound CAD, okay, so you are watching pound CAD to drop, specifically during the yeah, whatever. Yeah, so you're simply sticking to looking it to go down. Okay, that's going to be the target. Not a best trade, okay, for next week. This is not a best trade because price has already moved a lot and mostly this pair stays sideways. Okay, this pair mostly stays sideways, and in the previous weekly market outlook I was talking about this correction to break down. All right, this correction to break down. So it broken and went lower. So just a continuation trade. When you go after that trade, make sure you keep in your mind that you are, you know, looking to sell at close to this previous bottom, and it may change the formation. Okay, because you know there is a rate decision on the CAD next week. I'm not anticipating this move. Okay, pound to get strong. I'm not anticipating that. Okay, what I'm anticipating the CAD to drop, okay, and pound to drop too at the same time. Okay, and then this pair can visit these lows because of the uncertainties. Okay, both currencies can drop at the same time. So still potential there on this chart. Last week we were expecting it to form a flat formation and continue to keep rising. That's the move. Okay, Euro New Zealand dollar is just simply rising nicely for upside. This pair extended to the downside. Okay, last week we were expecting it to hold this previous low, so slightly went lower, but again it managed to get back. So let's straight away get to the lower time frame. Okay, so if you see any pullback over there at this area, okay, then simply look for that to break out and continue to keep pushing more higher. Not a best chart right now, okay, because it has bounced up from the floor. You have to be really good to chase that for more upside, okay. Potential is still there. It can continue to keep rising very, very aggressively for upside all the way back to that top, or even can go beyond that top like it has done previously, all right, like this. So need to be really good on lower time frame to chase that trade. So if you know, then trade. If you don't know, then do not trade. There are many other pairs where you can trade. Okay, Uzi Chief to drop last week, correction, art double top. Okay, so correction appeared slightly bigger one, and then price broken down. Okay, so what's next week? Simply a tiny correction, and that's the target. Small correction. If gets bigger, gonna be great. Okay, and that's the trade. Direction is very much clear over there on this chart. Okay, if I'm gonna make it more simple, then 1 hour time frame, moving averages, 61% retracement of this previous impulse, okay, which comes there, that area, within these area. So if I'm gonna pull out that box, okay, so within these areas you are looking pullback and continuation for more downside. So euro New Zealand dollar is just simply heading for the next wave. Last week we were expecting this flat formation to form, okay, and price to hold those moving averages for the next wave. So it's just simply heading for the next wave. Is there more potential on this chart for more upside? Absolutely yes. Okay, and the longer term target is this. Okay, 20 October. Pound Kiwi dollar is just about to tag that. Okay, and more downside on the stock market gonna do like this. Okay, you're gonna see that kind of aggressive strength on the euro New Zealand dollar. If something happens with this, with the equities from Fed side, okay, then this is not gonna drop. All right, so it's gonna do like this, aggressive, run off like that. So I'm not anticipating a crash kind of situation right now. Okay, just simply you are looking at more continuation. Okay, so pull back, price to go back within the moving averages like it has done there, and keep the trend intact for more upside. Short-term continuation simply, guys. Okay, so they're gonna, it has broken down last week. We were expecting it to hold that top, all right, and then continue to keep dragging lower. So it's just simply going down. The target is, let's just invert that, okay, and then you're gonna get the idea why euro New Zealand dollar is still behind. Okay, it is about to tag that 20 October. You see there, 20 October is about to being tested by the Kiwi against the Chief, right? It is still behind there. Okay, there's a huge gap, so we may see runoff on the euro against the New Zealand dollar if uncertainty is going to hit the market really hard. So this is to just continue to keep dragging lower back to that low, more downside, but for that move you need to see another correction. Not a best chart simply for the next week, okay, but if correction comes, then you are looking this to continue. Not a best chart, guys. Do not chase that. It's better not to chase, okay. You don't understand simply, okay, but this is what I'm anticipating, continuation for more downside. Kiwi CAD still can drag more downside before going to go higher. I'm anticipating this pair to find its floor, all right, and go higher. So trade with all precautions for buying, okay. It's not ready, okay. So New Zealand dollar is feeling the pain, okay. Stock market is dropping. Kiwi is the currency which is feeling that pain, but rest of the risk on currencies are not feeling the pain, all right. In Nasdaq 100 index went lower. Other risk on currencies are still strong. This is the only currency which is feeling the pain. We can say that CAD gained because of the stronger oil, right? And Kiwi was gaining before all these currencies to gain because of the rate hikes from the Reserve Bank of New Zealand. All right, so this is not this New Zealand weaknesses is not sending a very good signal for the equities. All right, so what you are looking aggressive move, correction, and this move. Okay, so precautions, trade with care. That's what I'm anticipating right now. Okay, but not a best chart right now. Okay, so same goes with this chart. Still expecting it to just keep dragging lower. Not a best chart. Just finish that move. We were expecting, if you remember, that wave to happen from this previous top. It's happening, about to complete the wave over there at that previous low. Okay, so we may see some buying over there. Okay, so when you're gonna see buying, okay, let me tell you, when CAD gonna get, when these two pairs gonna be ready, Kiwi and Uzi, once you're gonna see that oil gonna start dropping aggressively from the top, then you should chase. Okay, then you should start selling the CAD, or let the dollar CAD rise very aggressively for upside. Okay, if dollar CAD, I have shown you buying on the dollar CAD. If dollar CAD start rising aggressively for upside, okay, then start, you know, buying Australian dollar or Kiwi dollar. All right, if oil is not dropping, if dollar CAD is not pushing higher, then start then avoid buying the Australian dollar, all right, and New Zealand dollar. So normally when we see that there is uncertainty and stock market goes down, there is a strong correlation. There is a very strong correlation that the Australian dollar and New Zealand dollar also goes down with the CAD, against the CAD. Okay, so we see more strength on the CAD as with compared to the Aussie and Kiwi. They goes down more sharply. Okay, but CAD, you know, still CAD is a, you know, oil currency. Yeah, can stay strong during the period of uncertainties, specifically against these two currencies. All right, so strength on dollar against the CAD, or strong drop, aggressive drop on oil. I'm gonna give you a clue that these two currencies are ready to buy. Until you don't see move on there, stop, you know, buying. But yes, I'm anticipating, you know, this move on these two currencies, this move. All right, if this move is not going to come, you will not see buying on the dollar CAD. You will not see drop on the CAD yen. CAD yen is going to drop. Obviously, you're going to see this next leg higher on these two currencies. Okay, but make sure you understand that where you should build your potential, where is more risk. Okay, so if you go short on the CAD yen, or if you go long on the dollar CAD, all right, and at the same time you go long on the Aussie CAD and Kiwi CAD, then these two currencies may stay at the bottom. It may take, you know, some time to go higher. Okay, but dollar CAD and Kiwi CAD, they can move quicker than these two currencies. Okay, you may tie up your capital with these two currencies, so keep that thing in mind. Okay, they're gonna move sharply for upside. Then these two currencies can stay at the bottom like this. Okay, that's the example. You see there, the price remained sideways and then found its direction. Okay, so huge sideways market on the Kiwi against the CAD. Then it's found its, so that can happen during the period of uncertainties or sharp drop on the indices. Okay, so New Zealand, Australian dollar and New Zealand dollar, I'm still anticipating this to go down. You shouldn't be a, you know, buyer or even, you know, seller right now. This pair is not a best pair for us. Okay, so if I'm gonna look at the, you know, we were expecting this to go higher, so I'm anticipating this to go down. Simple. Not a best chart right now. I'm gonna ignore the Aussie chief. Okay, but still anticipating Aussie chief, a deeper pullback on the, sorry, Euro chief, deeper pullback. Okay, so a deeper pullback. Not a best currency, guys. Simply avoid it, ignore it. Okay, so there you are watching this currency. You are watching during the Fed rate decision. Okay, any strong action from the Fed can give you that move back to that top, or in best case scenario, that kind of move. Okay, so next week, watch it very closely. So in the last weekly market outlook, I was saying that breakout. Okay, the wedge. Okay, this wedge was there, and that wedge to break out. So wedge broken out, but break is not strong enough for more upside. Okay, so you are paying attention on all these corrections. Okay, price can rise sharply at any time for more upside, specifically during the Fed rate decision. Okay, so this to break out and sharply continue to keep rising. So your short-term trade gonna be, you know, these areas. Okay, and in case if move is going to be really strong, aggressive, okay, then extend your target back to that 22. And in case if stock market is going to crash, okay, then you're going to see that kind of runoff. Okay, so this chart is still there, longer term reversal. This is not going to stay at that floor. This is going to be the move. Okay, but as I said previously, if you are looking to buy this chart, then you should be a very longer term investor. All right, and it can take a lot of time before going to continue to keep rising for more upside. So this is what you are looking for the next week during the Fed rate decision. All right, so oil. Okay, so important. So in the previous weekly market outlook, we were expecting it to retrace up to up to 88 or 70%, 70 to 8, all right, within these areas, retracement up to these areas. So it just gone beyond that previous top, which I wasn't anticipating, all right. But still, this is gonna be a longer term sell opportunity, okay. This is gonna be a longer term sell opportunity, guys. So this is not going to happen. Let me go back to this previous chart again. Okay, so inflation is at 7. People are talking about that oil, oil market is very tight. Oil reserves are falling very, very aggressively, sharply. There is no enough oil supply in the market, which is causing the oil to go higher. That makes sense, okay? So supply shortage is there because of the OPEC countries. So that's also causing the higher inflation. All right, so higher oil prices bringing higher energy cost, okay? That's causing the higher inflation. So central banks are, heavily under pressure to contain the inflation, okay? So when Fed or other major central banks, when they're gonna raise the interest rate and gonna try to contain the inflation, okay, inflation gonna drop, then energy cost is not going to maintain its bullish trend for more upside, okay? Or in other words, I don't see oil gonna continue its bullish trend for more upside. People are talking about that oil gonna go up to $100 or in worst case scenario 150. I don't see 150 is going to come anytime soon on oil, okay? So you're gonna see that the central bank gonna contain that inflation gonna start falling. Inflation is already falling, all right? If we're gonna see forward expectations, so inflation came down sharply already, dropping, okay? So it's dropped from that previous top almost 18%, okay? So it's a big drop, we can say that. So inflation is already dropping over there. So energy cost needs to drop, or in other words, oil needs to drop. All right, so oil has to drop. So what you are looking, so in longer term, I'm anticipating oil to visit this low, okay, which is again 20 October lows. We can say that's my longer term direction of the oil. I'm not anticipating oil to run for more upside. So for next week, okay, this wave is almost completed. Okay, so the next wave is almost completed. I was anticipating this wave to go at least up to 70 or 80. Do not go beyond that, but it has slightly gone beyond that. So it's giving you the next opportunity, okay? So the next opportunity gonna be up to, you are looking first up to this target, okay? 88. Right, so that's the target. So this shouldn't be that way. The retracement of this move, that's what you are looking. Okay, so this is the trade first. You are targeting these price 65, you are targeting first, okay? And we may see, price to bounce off again from 65 or that 60 areas back within these areas. So that's secondary. We'll see once price gonna visit those areas, that prices. All right, so you are looking that drop, okay? So what you are looking on lower time frame, simply these corrections to break down. If I'm gonna pull out moving averages, price is struggling to go beyond that top. Okay, so once market gonna open, you are simply looking these flags to break down. Okay, that flag to break down sharply and continue to keep dragging lower. So if it doesn't break, okay, then this is the top. Simply you are watching price to hold. All right, so 87 or 88, we can say that. Okay, price to hold that 88. So once market gonna open, breakdown. Okay, sharp breakdown. It's almost ready to watch for that breakout. All right, it's almost ready to watch for that breakout. So sharp breakout comes like this previous one you see over there. Okay, so similar you are finding over there, that breakout. Once that breakout gonna come, you're gonna see more upside on the dollar CAD. All right, so if I'm gonna pull out dollar CAD, okay, so dollar CAD is already running higher. We need to invert that chart. Okay, so your dollar CAD chart has already broken that correction, 1 hour time frame correction. Okay, there you see. So that's what you are looking for. So if I'm gonna, I don't know if I can take these bar. No, I can't take these bar patterns. All right, so for that I have to go to the dollar CAD chart. So you are looking copy paste stuff. Okay, so you are looking this to break down. Okay, this move to just appear over there. Okay, and this correction to break down and continue to keep dragging lower. Hope that makes sense. Okay, so breakdown and oil to continue its bearish trend for more than so, and any correction you're going to see all the way back within these areas. Okay, so the chart is very much similar like the pound yen, guys. If you remember the pound yen has also done that way. Okay, so started slowly and then found its bearish momentum. Gold, come on guys, so just bear with me. So there you see, okay, the point which I'm trying to make there is that, okay, there you see the similar pattern you've seen over there, and you have seen similar pattern here on the oil, right? And finally you got a drop over there on the okay, and broke out pound yen and then started to end lower. So oil is also a risk on asset. Okay, when oil goes higher means that there is strong risk on sentiment. Okay, so all these corrections broken down. Okay, oil is still, you know, lagging behind the others. Okay, this is what you are looking here next week, sharp breakdown. In case if this is not going to break down, yeah, so let that to push slightly more higher. No need to worry about that. Okay, so you are looking at a best price. So 87, 86 or 88 areas are a best price. Okay, so this might be a longer term top on oil. You may not get that price anytime, you know, soon or short on oil. So this might be a longer term drop, guys. Okay, so keep same analysis on the Brent. I don't think so I need to talk about that a lot. Okay, hope that makes sense for you to understand now. Okay, so correction is already there. You are simply looking for that to break down aggressively to the downside. Okay, natural gas, just ignore it. This is also correcting. I'm gonna ignore that and gonna look at the gold. So gold, when you are trading on gold, so people are talking about that gold gonna go higher. All right, gold gonna go higher like that. Let's talk about the logic. Is that make sense for the gold to run for another leg higher? So first of all, what makes gold to go higher? Okay, first of all, we need to understand that why gold, you know, rise against the dollar. Okay, so gold is a safe haven, all right, store of value. When anything happens in the world, gold goes higher. That's the proven fact. We can say that, or everyone, talks about that way, that the gold only goes higher when something happened in the world. We see uncertainties, and people, run after the gold. Okay, but right now the fundamentals which are developing, they are against that. Okay, so if I'm gonna again go back to that chart, this chart, all right, so why gold went higher? There is the reason: inflation. Okay, inflation caused gold to go higher. More money has been printed out by the central banks, which created inflation. And before that inflation, we can say that hit the zero in March 2020. We can say that, all right? So March 2020, it tagged zero, bottomed. And central banks slashed interest rates, cheaper currencies, all right? More currency being printed by the central banks, and inflation went higher. And at the same time, gold went for the next leg higher. Okay, gold went higher for the next leg. So right now, okay, again, this chart is very important, as I said before. So Fed fund rate is sitting at the bottom, right? What Fed is going to do, they are looking to raise the interest rate. Okay, interest rate can come up to 3, yeah, or at the end of this year can come up to 1. And what inflation gonna do? Okay, when interest rate gonna go higher, inflation no gonna run, inflation gonna drop. Okay, when inflation gonna drop, interest rate gonna come up. Yeah, when inflation gonna go under control. All right, when central bank's gonna tighten, the Fed gonna tighten its monetary policy, they're gonna suck the money away from the market. All right, then gold no gonna continue its bullish trend for more upside. Okay, so some people are talking about that when Fed gonna raise the interest rate, we're gonna have cascading, effect of that higher interest rate on inflation gonna run more higher. No, that's not going to happen. Okay, I have already shown you the 5-year forward inflation expectations, they are dropping. So inflation gonna drop. Okay, inflation not gonna continue to keep pushing more high. Inflation gonna drop, rates gonna go higher. So gold not gonna continue its bullish trend for more upside. Okay, dollar gonna gain, dollar gonna get stronger. So gold gonna drop sharply to the downside. So it's not making sense right now for gold to continue to keep pushing more higher. All right. So also, when yield is running around at 190. Okay, so it went up to 190 last week and then dragged lower. So went up to 190. Okay, then dragged lower. That's because of that you have seen strength on the gold. So what I have said before on the yield is not going to drop for longer term. Okay, so yield gonna continue its trend for more upside. All right, more upside. So you shouldn't be a buyer on gold for more upside for longer term. Okay, so if you are buying gold, you should be a short-term buyer on gold. Okay, and you are looking gold to drop sharply to the downside. Okay, that's what it did last time when when Fed went for a tightening cycle. Okay, that's what you have seen when Fed went for a tightening cycle. That's what you have seen, and it's found its bottom over there, and for this cycle it went higher. Okay, this downs, yeah. Once we're gonna have next recession, okay, definitely you're gonna see that the central bank gonna print more money, and we're gonna have next runoff. So that's not there yet. Next runoff is not there yet on gold. So if I'm gonna talk about on lower time frame, then you are simply looking next week, specifically during the Fed rate decision, gold to break down sharply to the downside. Okay, and give us that aggressive move to the downside back to that previous low. All right, so your sell opportunity gonna stay intact as long as price gonna stay below that previous top. If I'm gonna look at the lower time frame, price is still trying. That's what I was showing in the last weekly market outlook. Okay, so price to break down, drop, or go back up. Okay, and then drop. So same analysis still there. All right, so if I'm gonna draw some fib lines over there, let's remove that. So these fib lines. Okay, so price is retracing back to that impulsive move and is around at 70%. Okay, so in max it can rise for more upside. Okay, like that. So dollar, I have shown you across the market, dollar to gain. So we have seen this move last week because of these weaknesses on the stock market. Okay, stock market went lower, oil slightly went higher. So generally gold should rise aggressively, not oil. Okay, so gold should rise aggressively when stock goes down. Okay, but right now we are having different kind of scenario, the scenario which we have previously when we were having a recession. Now Fed is looking to change their policy, okay, tighten its policy. So that's the reason gold is not rising aggressively for upside while stock market is dropping. All right, so fundamentals are different this time. So if it's slightly push more higher, this is the move. Okay, so short to medium term trade gonna be that. Trade precautiously. All right, do not trade blindly. Once you see the price action, then trade. Okay, so trade when Fed is announcing their trade the scene. Okay, and this is what you are looking, some kind of sharp move. Okay, like that. Okay, like that. This to happen or happen from that top, right? From that top and from 1870 or 1875, whatever the price, you're looking for that aggressive sharp sell-off. So same analysis goes with the silver. Silver is not a best chart right now. Okay, but during the Fed rate decision, this is the top, all right, and you are looking this to drag lower back to that low, okay, or more downside. So on copper, I'm anticipating copper to drop to, okay, inflation expectations dropping, all right, then these metals should not stay bullish. Okay, this is what I'm anticipating first. Okay, and longer term more downside. What else metal you are talking about? Okay, and all these to go down. Okay, longer term, lumber to drop to, what else commodities you are talking about? There is any, then let me know, I can talk about that. Okay, so corn to go down to for longer term. All right, cotton went higher. Didn't expect that to go that much far away. Okay, wasn't expecting it to break the previous top, but anyway, the longer term is the bearish move. Okay, this is what I'm anticipating. All right, so soybean also went higher, looking for it to continue. So next week Fed is coming, not expecting it to just continue to keep pushing more higher. All right, so that to drop to, right, so go down and deflationary moves. Okay, so same goes with the wheat to drop to. So let's talk about some coins. All right, so the Solana, right? Solana should be there. Okay, so this is the coin, guys. You should look for longer term, more upside. So in the previous, let me check if I do have any chart on it. There it is. Okay, so we are within that bearish wave. It's dropping, from that top and heading down. Okay, so still bottom is not there yet on it. As said, we need to see bottom on other major coins first before this coin start rising for more upside. Okay, so in the previous weekly market outlook, I'm not sure I have shown that or not. Okay, but this is what we were expecting, more downside. All right, and the lower this coin goes is best. All right, it's great. It has a potential for longer term runoff for more upside, and it can catch up the Ethereum. All right, Ethereum is far away right now, but in longer term, okay, when I say longer term, like 5 years or 10 years, it has a great potential to run for more upside. So it's a great coin, we can say that, to chase. So right now, the lower the price goes is best. It's running at 100 right now, okay, and the previous low we have seen at $20. So still can run. Okay, we can't say that it can't go that much far away. It can go. All right, so let's just stick to the simple analysis. What was the simple analysis? As long as price stay below the 4-hour moving averages, you are not looking price to rise. Okay, so you are right now you are simply looking for another correction to just keep dragging lower. Okay, up to what level? There is no support, guys. If you are looking to buy just based on support, there is no support. Okay, you can't buy that based on support. I mean, let's just buy based on that support or this support. There is no support, so do not buy based on that support. Once we're gonna see that there is a bottom on other major coins, this is also gonna run aggressively for upside. Okay, so let this just keep falling, but prepare for a longer term buying on this coin. BNB I have already shown. All right, so let me check what has happened over here. Okay, nothing. All right, nothing has happened over there except dropping, because Bitcoin is dropping, so it is going down, and let this to just keep dragging lower. Okay, so last week we were expecting it to just go down, so there you are looking this to find its floor. Okay, and then we may see another leg higher. ADA go down. Okay, in the previous weekly market outlook we were expecting that flat to appear, or expanding triangle. Okay, this area is just going down, more downside is possible. Okay, right now it's holding this area. It can drag more lower. There is no buying yet on it. All right, do not look for buy yet on it as long as Bitcoin is dropping. Okay, more downside can happen over there. So okay, in the previous weekly market outlook we were expecting this leg to appear. Okay, again, can't say anything. Stay neutral as long as you know the Bitcoin is dropping. Okay, let me look at the sand. Okay, so going down, more downside, just keep dropping lower all the way back to that previous low. GTC dropping. Okay, so sit at the floor first. Okay, in the previous weekly market outlook we were expecting it to drag lower. It's dragging, so more downside is. Let's look at the previous low. This is the previous low. It still can go to that low. Okay, the lower it goes, best. Right, the lower it goes, best. So still corrections are appearing over there. You shouldn't run after those corrections. All right, like BTC is doing right now. Drag. Okay, go more downside. So this is also going down. Okay, you see that I was the only one who was bearish on the crypto market. The rest of the people are just, you know, showing buy without understanding that what's happening. And I was the only one which I was showing that, guys, it's not ready, do not buy, they are going to drop. Okay, and let's look at this. Yeah. So it has dropped almost with 1.43 trillion. Okay, so it dropped from 3 to 149. Okay, and as I have shown you on the BTC, okay, BTC is about to test that low, so it still can drop with, okay, last time when I was showing this, okay, was expecting it to drop with another 800 billion. So it's dropping and still can drag, so it still can wipe out another 380 billion from the crypto market. Okay, so once you're gonna see it's gonna test that, then the total market cap of the crypto gonna be around 1.17. all right, so drop from 3 to 1.17, so it's gonna be a huge drop, okay, from this crypto market. Okay, more than 50% drop, 60% drop, we can 60-70% drop. All right, we can say that more than 50% drop in the crypto market. So it's a huge, yes, okay, I'm not saying that, guys, they are not going to rise. So there are gonna be opportunities, they are going to rise, there are gonna be a longer term potential on some coins. Some coins are going to survive. Many coins gonna wiped out during this crash. All right, many small coins or fake coins, we can say that they're gonna wiped out from this crash, but there are gonna be many coins which are gonna survive and gonna have huge potential to run for more upside. Okay, but that point hasn't come yet. Okay, so GTC to finish, go more downside. KuCoin is also dropping. Okay, I mean, this is also going to be a good coin for longer term investment like BNB. Okay, so I'm anticipating this to drop more, okay, and go up to 4. So you can hold that coin as well for longer term, for more upside. It has a potential to run for longer term. All right. So, but right now, this too, if I'm going to remove everything from it, okay, and gonna simply bring that huge expanding triangle, which is appearing over there on the whole crypto market right now. Yeah, so still we got a room to run all the way back to that low $5. I'm gonna look at the XRP. Dogecoin to also go down. Okay, you see that Elon Musk is trying to push this coin with his tweets for more upside. He's failed to do that because Fed, you cannot fight with the Fed, all right? So this to just keep dragging more lower. Okay, so there you can build some positions. Okay, or in worst case scenario, 0.007. Solana, I said, let that continue to keep dragging lower, but Solana got a potential. All right, so request also, network also dropping, more downside. These were the coins, okay, the coins which I'm showing, they pumped, all right, they pumped aggressively for upside. Now they are retracing, and even I have shown you that they're gonna go back to that previous low. All right, and they are going, so still can continue to keep dragging more lower. 100% retracement we can see, and then they can find their bottom over there, and then we may see some strength. Okay, not expecting them to go that much far away, but up to these areas. Okay, these areas we can see some strength. And all these, this is also gonna push more lower. Okay, not buying, not ready for buying. All right, so this is also gonna stay under pressure, not expecting it to rise. So we have seen some strength on it. All right, so simply more downside. Okay, at least up to this area, so more downside. Oita also went lower. This is my old structure. It slightly went higher. All right, but this is not ready yet, as you guys know that. Okay, so there you are looking for some buying over some price action. These areas, it's about to test at 60. You are watching 60 area closely. Okay, and that's going to be the trade first. Best case scenario, another run, but I'm not anticipating that anytime soon. Okay, so this is also dragging lower. Okay, the next move is just happening over here. You are looking this to tag that, and then 70%. Okay, 70% tracement. I'm anticipating this previous bearish wave. 70% tracement can happen. Litecoin as well. Okay, so 70% tracement can happen. They are trying to find their bottom. This move, all right, that move, 70% tracement. The XRP also dragging lower. Okay, so 70% tracement. This previous move. All right, so 70% retracement. This area, so 110. It still can break down. Okay, do not run. Do not rush. Do not rush. Let them sit and find. Keep eyes. Okay, so let's just finish here, guys. I think enough for this week. We got almost 2.5 hour session. It's a long session. Let's just finish here. Is there any question? If there is any question, then let me know about that. Thank you very much, everyone, for joining. Thank you very much, everyone, for joining. I'm looking at your questions. Is there any question? Then let me know. Joining anywhere you are. So hawkish means there are two terms being used in the monetary policy. All right, so one is dovish, one is hawkish. So dovish means they're going to slash the interest, they're going to cut the interest rate, and hawkish means they're going to raise the interest rates. Okay, depending on the inflation. If inflation is falling, they're going to cut the interest rates. If inflation is rising, they're going to raise the interest rates to contain the inflation. Okay, so the goal is to contain the inflation, contain the prices. All right, So there are many dump coins, all right? If you are buying any coin without, do not buy simply any coin without understanding what is the purpose of that coin or token. First of all, understand that if if that makes sense for you, then you can invest. Okay, without understanding, without logic, do not invest into any coin. Right, because many coins, there are almost 17,000 coins, all right, 16 or 70,000 coins and tokens. So all of them are not going to survive. Many coins have already wiped out from the crypto market since 2010, 9 and 10. So there are a lot of tokens and coins where you can invest, but do not invest without understanding, without logic. If that makes sense and logic for you, and you think that they're going to survive and they have reason to survive, and they can their project is worthwhile and going to sustain in future, then invest. Otherwise, it's like putting your money in the bin. Yeah, buying every coin or token without understanding is like putting your money in bin. Guys, so FTM, I said, simply understand that. Okay, so the major coin is the BTC. If BTC is dropping, okay, then the rest of the cryptocurrency, rest of the market gonna be under pressure. All right, so you can see couple of candles, couple of strength on a specific coin, or on a single coin, but that is not going to sustain, that is not going to survive for longer term. You're not gonna see runoff, bigger runoff on that specific coin. Okay, if the whole market, the whole crypto market is dropping, okay, and one specific coin or single coin is just rising, that is not going to sustain its strength for more upside. Okay, do not stick to that. If you are in, if you bought that, okay, then better to realize the profit rather than holding that for longer term. All right, so I don't see phantom to continue to keep rising while the Bitcoin is dropping. Okay, I only see that it's gonna stay under pressure and gonna tag that low or maybe more downside. It's not making sense for more upside. Dollar rand, okay, so dollar rand gonna continue its bullish trend. Okay, again, wait for the Fed rate decision and look for dollar rand to rise. So there is the dollar rand. Okay, I was expecting it to continue. It's went higher slightly, yeah, then correction got bigger. Okay, but that's still a buy opportunity for more upside, specifically during the Fed rate decision. Let me check moving averages. There you got the moving averages. Okay, so next week during the Fed rate decision, this sharp move, okay, this correction, and that's going to be the target. Okay, medium term target, and longer term target is much high, is at much higher levels. You go more higher. Yeah, so you are not looking that much, tries to go that much far away. Okay, just stick to this next wave, like DXY is already doing that move. US30 already shown. Chief, yen and gold only safe havens, or there are more? So yes, chief, yen, dollar. Yeah, dollar is also a safe haven, and gold and silver. These are the safe havens. You can Google that. Okay, Google it. You're gonna find a lot of articles over there regarding risk on and risk off assets. Okay, guys. So let's just finish here. Yes, okay. If dot, yes, 10. Yes, 10. Okay, just stick to the, if you remember the previous weekly market outlook, all right? So I'm not sure you guys are watching or not, okay? And once you watch, not sure you're remembering those previous, charts or not, okay? But I have shown you there. I told you that you are watching that wedge, okay? You see that wedge was forming over there on many, coins, yeah. And as long as Bitcoin is falling to that low, all right, wherever you see that the coins are still behind, okay, they're not gonna rise for upside, okay? They're not gonna continue to keep rising, okay? They're also gonna follow to this low, they're also gonna follow the Bitcoin, and they're gonna drop, okay? Yes, dot can visit to this previous low, it can, visit to that 10, or in worst case scenario we can say that, this area, right? So 7 or 6, 7 or 8, right? So 7 or 8. Right, guys, so let's just finish here, okay? So sorry for not looking at the coins or currencies or stock which you are saying now, because we are here almost, since last 2.5 hours. So I can see that you guys are tied too. Okay, so let's just finish here. We'll see you back again in another weekly market outlook. Until then, bye. So just keep in mind that last week we have seen sell-off in the stock market, okay? That sell-off still can persist next week during the Fed rate decision, all right? Risk of wave is still there, and that risk of wave still can persist over there for next 1 to 2 weeks. Thank you and bye.